Well, as a regulator, regulator is considered to be a father of the industry. As a father, I would say that this regulator has three children. Hello, my name is Vikas Agarwal and I am the founder of AIF and PMS Experts India. What we have observed is that there are more than 90% of the viewers in our YouTube channel who have watched our video and have been watching our video continuously at the regular intervals, but have not yet subscribed to our channel. So my submission to all of you is that please subscribe to our channel so that we can reach out to more individuals like you and spread the awareness about the whole investing game. Thank you so much. Hello, my name is Vikas Agarwal and I'm the founder of AIF and PMS Experts India. AIF is your alternative investment funds and PMS is portfolio management services. Well, many times I come across many investors and they keep asking me about what is the difference between AIFs, PMSs and mutual funds. Well, my answer to that is slightly different. Let me share. Well, as a regulator, regulator is considered to be a father of the industry. As a father, I would say that this regulator has three children. There is something called mutual fund, which is the eldest one. So mutual fund to sahi hai. There is no denying on the fact that mutual fund sahi nahi hai. Mutual fund has been into existence for over 27 years now, because it got regulated in the year of 1996, and ever since it has come into existence, even when you pick up the worst performing mutual funds, it would have ended up delivering 11 to 12% returns, closer to that, because your benchmark itself has delivered about 10 to 11% in the last 27 years in India. And this is, I'm talking about year on year CAGR returns. Mutual fund to sahi hai, that's number one. Number two is PMS, portfolio management services. Now, what is portfolio management services? In portfolio management services, essentially you're giving a sort of mandate to the portfolio manager to invest on your behalf. However, the stocks that the fund manager invests remain there in your demat account. So ownership of those businesses are in your hand, in your demat account. However, you giving the mandate to the portfolio manager to invest on your behalf. Now, there are good quality portfolio managers who used to be a part of mutual fund industry. They came out of their organization and they bring about almost 1.5 to 2 decades of track record on the table, and now started their own portfolio management scheme. They've taken a license from the SEBI and running these schemes. And I'm glad to share that some of them have really outperformed the benchmark significantly. But still, I would not compare mutual fund with PMS, because in mutual fund, it's managed under pool account. When you have a pool account, you have a common goal. When you have a common goal, there are investors who come and join the pool. There are investors who exit at different times, at different levels of the markets. So in a way that you are sharing a common goal where you are trying to create your wealth with help of mutual fund managers who invest on your behalf again, but they do it at the pool level. Whereas this PMS is these shares, the portfolio which is created by portfolio manager. It is all stocks are held in your demat account. So it's not a right comparison, I would say. And I won't say that you should have all your money in mutual funds or you should have all your money in PMSs. I would say that you should have diversification. The third thing is the alternative investment funds. Well, this got regulated in India in the year of 2011 and 12. Well, that was a time, otherwise people used to call it venture funds, capital funds, private equity, etc., etc. The regulator said, how do I track these managers? How do we see that all of them are working in the interest of the investors? How do we bring everybody on the same platform? And how do we have same regulations for everyone? And that is how the AIF got originated. The birth of AIF took place in India. Well, this broadly defines the regulation And in the last 12 years, I'm glad to share that SEBI has categorized the whole thing in three different parts, which is category 1, which essentially invests in startup funds, category 2, which essentially invest in private equities, and category 3, which essentially invest in listed space or maybe hedge fund, which is more like a long short portfolio. Well, again, this AIF is, I would say, is comparable with mutual funds, but let's understand that what was the need for the regulator to create an additional category of AIF when you already have mutual funds at a first place. Let's understand that. Now there are some HNI investors or ultra HNI investors who wants to create a concentrated portfolio and wants to basically customize the portfolio, wants to have a different objective of the portfolio, of the pool account. They have been allowed to accommodate 1000 investors, create a structure again at a pool level and manage the funds. In mutual funds you have daily NAV, in Cat 3 AIFs you have monthly NAV. In mutual funds you get portfolio disclosure at the end of the month. In alternative investment funds you get at the end of the quarter. But both the portfolio managers are essentially trying to create wealth for you. The way I would say is that, well, this is not a comparable, because in category 1 they invest in unlisted space, in category 2 they invest in private credit. All that flexibility is not been available in the mutual fund space. So therefore I would say that, well, this is not comparable. One should not compare also. The way I look at it is, I would look at who is ultimately managing my funds, because the way I would prefer is, I would bet on the jockey instead of betting on the horse. And if the portfolio manager is really good and do not have, for example, mutual fund license, but have PMS license and doing very well and bring good track record on the table, well, I would prefer to allocate money to that portfolio manager. Or if there is any mutual fund company which is doing much better and have a differentiated strategy, which is not duplicating my portfolio on the alternative funds or in the portfolio management services, I would like to allocate the funds. So we at AIF and PMS Experts India do not differentiate based on the instruments. What we differentiate is, we look at the quality of the portfolio managers, the capability of the portfolio managers, their DNA, their investment expertise. Then we look at that, what is the quality of the portfolio, that's the second eye, and third eye is we look at the performance. And basis these three, and there are 57 different parameters through which we evaluate the portfolio managers, all put together, and then we allocate money to our portfolio manager. So if you are someone who is really looking at creating a long-term portfolio with high quality portfolio managers, my submission to you would be, stop looking at the instruments and start evaluating the capabilities of the portfolio managers and their schemes, and identify the uniqueness of those schemes or the services that they provide, and based on that create the portfolio. If you can do it yourself, please do it. If you need some assistance from our team of experts, our team would be happy to reach out to you and give you more details about it. To know more about it, please visit aifpms.com and book your call with a team of experts. They are NISM qualified experienced team. They bring about at least 20 years of experience on the table. Well, we have an internal investment committee where your proposal will be discussed and then shared back with you, so that you have a clear-cut understanding about where are you investing. So if you are looking at working with high quality portfolio managers, please reach out to us. Thank you.